Okay, so last 10 minutes of the conversation, it's been really a fun conversation. I've learned so much from you. Thank you so much for being here.
Thank you.
But last 10 minutes, right? For someone who is, and of course the main crux of the conversation was around the fact that the Nifty could turn into the Sensex in the next 10 years. So for that young viewer who is still starting out on their financial freedom journey, give us like a 4-step routine for investing.
Yeah.
What do you think is the best way to become financially independent from, say, 20 till the age of 40?
Yeah, no, I think the opportunity is out here. I would say I would take a clue from what Buffett says. So you earn money, income, then should be savings, and the spillover should be expenses. So usually what happens, we earn money, we spend whatever chiller is left, you invest, right? What Buffett says is that whatever you earn, you put a fixed amount in savings, then whatever is left is what you spend. So I think in your initial years, you have the advantage of 30, 40 years to earn money, retire, and in between you can take a lot of risk also. So in the early years, unfortunately, I could not do that. But in the early years, if you can invest a lot, right, and spend very, very little, I think subsequently over 10, 20 years, you'll be able to spend a lot and still not compromise on savings, right? So the first 10 years, one has to compromise on not buying that tempting car or that tempting house or buying branded clothes or spending a lot on food and mobile phones changing every year. This is the pattern of the young people. If you can control that and live a humble life and save a lot of money, right? And just that compounding again, it will take care of. So I would say that whatever you earn post-tax, put 30% SIP. And the rest you do whatever you want to do. I'm still giving 2/3 to spend.
But the common argument is that why should I save in my youth and then, I'll turn old one day and then, what's the point of saving all that money?
You have to say that you want to live rich or you want to retire rich, right? If you want to retire rich, then you have to compromise somewhere. See, either you compromise in your later years, because see what happens the moment you cross 40, right? I crossed 40 and then suddenly a lot of alarm bells started to ring because my kids were coming into higher education. So one of them wanted to go abroad. So suddenly you're seeing several crores which has to be spent. And then within that time frame, you will have also the marriages coming in. And then I have to take care of me and my wife once everything is settled, right? So after 40, a lot of bells ring. I'm sure it will be ring. You're young, but it will start ringing at some stage. So that time, now you have only 15 years to compound, versus if you can think of all these things from our experiences and start early, then at 40 you will know, maybe you'll retire at 40. So I think early days, and fortunately our generation, at least probably till your generation, things were not as good. I mean, our parents have lived a very average life, small homes, one car, small stuff, right? Today's parents are a lot more financially secure. Homes are, I mean, if somebody has a home, a new kid has a good home to stay and doesn't need to spend for ration, right? तो बच्चा क्या करने के लिए? आप कितना खर्च कर लोगे खाने पीने पे, कपड़ों पे, सब चीजों पे, right? घूमने फिरने पे. So I think a large part of expense. When I started working, I had to take care of a lot of things. I had to start giving my mom. I had to plan for the next home. I had to plan for my wife. We got married also. Then the kids came. So it's been on a treadmill. For the today's generation, that's not so much of a pressure. For some who don't have anything, unfortunately, they have to do a lot more planning. Lot more better planning. Net, Sonia, what I'm saying is that just invest well in your early years. It is easy to do in early years, difficult to do in your latter years.
So what should the fund investment pattern be? I mean, since you're heading the asset management business, I'm asking you, how much should go into passive investing? How much into active investing? How much into direct stocks? For a young investor, what's your recommendation?
You start with passive. Start with a Nifty 500. It gives you a good broad-based exposure to large cap, mid cap, small cap. Very good index, done very, very well. It gives you tadka of mid and small, so higher return than Nifty 50. For initial 2-3 years, get used to the volatility up and down. And as you start understanding what equities is all about, then you can start to track, active mutual funds and then go on to maybe a mid cap, small cap. All of those things you can do in your first 10-15 years, higher side. So if possible, in your very, very early years, you should be 100% equity, or maybe at least 80% equity. At least. वो classic formula है, 100 minus 8 should be equity. Just follow that formula. So if you're 25, 100 minus 20, 75 तो equity रखो. 75 equity में maybe you can be 50% Nifty 500, 25% you can buy 2 or 3 active funds. I'm talking about the initial 5-10 years till you're getting comfortable. And then as you get expert, you start changing your pattern, and you can decide what. But the starting point should be Nifty 500 before jumping into small, mid, and then then you'll get scared. You leave the journey and go. Like when I started investing, 3 times I became bankrupt.
Really?
So my early days, regulations were not tight. I used to do future option, became zero. Then I bought one of the IPO, which was a last top IPO of 2008. You can figure out the name. Again, zero.
Everyone got into that.
After that, 2008 के बाद में फिर मैंने वो SIP किया. I'm sitting peacefully talking to you. I work out well, I work well, I sleep well. SIPs, and whenever bonus, simply just put in mutual funds. If you're lucky, you can understand stocks. You want to go buy there 2, 3, 4, do that. But otherwise,
but it's interesting. You've gone through that journey where you've done FNO and you've done direct stocks and lost all your money.
We can have one more episode on that. What all the mistakes I've done. I bought into real estate, on giving just simply on interest. But that I recovered thanks to RERA coming in. But I went through a painful journey because simply gave to a builder on a allotment letter and on a fixed interest. So, and anything which is...
But even I did that, by the way. Even I lost a lot of money in real estate.
I recovered. Only my one investment is pending. 2 I've recovered. 1 thanks to RERA. Thanks to government for that. So, and this is what Ramdev ji taught me early on. That पहले उसको बाहर निकाल दो. ये जो कचरा करके रखा हुआ है ना. He says कि आप इक्विटी में डालो, ऊपर है नीचे जो भी आपको कल पैसे चाहिए कल आ जाते घर पे. T+1 कभी कभी, अभी तो T+0 पे बात चालू है. और इधर तो फंस गए आप.
रियल एस्टेट.
रियल एस्टेट, और उसके अंदर भी if you do stupid things, then don't do stupid things basically. And when you're young, you want to do a lot of, like, let's say, again, don't take me on the face value, but, a lot of interest on this crypto stuff here. Abhi that thing swings 30-40%. Underlying क्या है, क्या नहीं है, क्यों करना है, कुछ समझ में नहीं आता है, but there is a lot of craze. I was talking to my nephew when he was studying in US. I said, okay, now he got a job with Toyota. So I said, okay, अभी इंडिया भेजो पैसा, आप SIP शुरू कर दो. मामा, I will do cryptos over there. तो अभी वो cryptos कर रहे हैं. Right.
But crypto is big in the US.
Abhi now it's different, but yet, I mean, will you put? How will you put? How do you decide when to buy, when to sell, all that stuff?
Because the legalities are a bit vague
exactly,
in India.
Something which is not regulated.
If there was a regulator, I would put, for sure.
I will also put, but right now I don't have the guts to put. But I'm just saying, simply put, don't, in the initial years when you're building your portfolios, there will be a time when you can take that risk also. When you have enough money, you can put 5-10% and take a risk. वो zero हो जाएगा तो चलेगा. It will not impact you. But when you have only as much, and in that it is a very high risk. And if that becomes zero, I've seen that it is hell. Right now I'm laughing about it. But when I went through it, it was pain. In 2008, when I lost in that IPO, I took my wife and I said, I've lost everything. And then I went to Mangifera, on 5th Road, and she motivated me. And then, then I started the painful journey of SIP. And now that portfolio looks good.
So you invest all your money in the funds only?
All funds, and that too all Motilal only.
Obviously, yeah.
वही समझ में आता है तो उसी में डालते हैं.
And compliance भी है ना?
Compliance mutual funds के लिए इतना नहीं है. Compliance is more on stocks.
Okay.
And उतना time नहीं है what to buy, what not to buy. I know what my managers are doing. Pretty good portfolios. Just put money there and focus on your work. See, our focus, non-fund managers, non-equity investors, our focus should be to make money, earn money. Out of that, some portion you give it to professional for a small fee and let them make the money work for you. तो आप नहीं तो क्या कर रहे हो, आपने आपका core work को छोड़ के उसमें, then the moment you buy stocks, when I used to buy stocks, is that 24/7 you are on money control and seeing the ticker up and down, ऊपर and नीचे. फिर sometimes you're excited, sometimes you're demotivated because it's happening up and down, right? So then how much of your focus is deviating from the core work? Let's say if this is your core work, content development, and sitting in this interview, your head is in the ticker, what's happening on my portfolio. It will distract you.
So the same thing happened with me actually. I used to invest a lot in direct stocks back in the day, 10 years ago. Eventually I realized कि compounding will happen at 12, 13, 14% max, whatever you do.
And you're happy.
But in direct stocks, actually, you have a chance to lose a lot more than you lose in mutual funds. So largely, I mean, I still have a direct stock portfolio, but largely I wrap that up and I, just...
Absolutely.
And then eventually I moved from a lot of active funds to passive funds only.
And now, when you have slightly sizable corpus, there are so many alternate managers giving you very boutique stuff, non-mutual fund. See, mutual fund is a very mass vehicle, very tightly regulated, right? So it's like a no-nonsense kind of a thing. I mean, wahan dalo, shut it, fill it, forget it wala story hai. But now you have PMS, you have AIFs, you have private equity, you have venture capital, you have private credit. So once you have a sizable portfolio, then some part of the money you can do that, and that will give you still more boutique portfolio than a mutual fund portfolio. अब PMS कर लो तो आपके डीमैट में आ जाएगा. It's just that if you don't have the skill to decide what people who don't have knowledge buy stocks on price. People who have knowledge buy stocks on fundamentals. So when you buy on price, everything is on price, and why the price goes up, why it goes down. If you don't have the understanding, you will make mistakes.
Correct.
But if you understand the value, then even if it is down, you will hold on. नहीं भाई, this profit बढ़ रहा है इसका, ROE बढ़ रहा है, market share बढ़ रहा है. That is what the fundamental investor is. That is what the fund manager is seeing. I don't see my fund manager fretting over prices. They are fretting over quarter का number कैसा आ रहा है. Right? So the mindset changes.
It was really fun chatting with you. We've run out of time, but as you suggested, we're going to do a part 2 where we're going to discuss a lot more things, whether it's international investing. You guys are doing a lot through Gift City as well. And of course, a lot more on the mistakes that you've made. I'm waiting to hear those. But Akhil, thank you so much for joining us on the Money Mindset.
Thank you for the opportunity.